Coming up today, stocks close higher, Bitcoin rebounds off the lows. What caused the bounce today? Investors are still on edge. Why Friday is make or break for the stock market. More bullish tailwinds, data centers in space. And did we finally see a bottom in crypto today? It's going to be a good one, guys. Let's go. And welcome back, guys, on yet another interesting day in financial markets, getting an almost complete flip from yesterday. Crypto had sold off hard. Now we're getting a big bounce there today. Like I said last week, I expected a retracement in Bitcoin this week, which would be a good buy the dip opportunity like I did myself. And it looks like it may have finally happened. And we potentially confirmed a bottom here today on the back of this powerful thrust up off the low. On a bullish divergence that we can see on my DSI indicator here, with also a good move in strategy stock, pushing up over 5% today on big volume. Similar move in Ethereum, pushing up off the lows there today, along with the largest Ethereum treasury company, BitMine, also having a good day there on volume. And again, on a big bullish divergence off these lows, which like I told you guys yesterday, I also bought the dip on the BitMine leveraged ETF. And so if you like following somebody who actually trade and shares those trades with you, instead of just playing it safe and sitting on the fence, then make sure to smash that like and subscribe button so these videos show up in your feed every day. But just looking across the rest of the risk sensitive space out there, didn't really see a big bounce in high beta names. Still quite anemic moves out there, as some of the hottest stocks this year are still having big pullback. NewScale Power, SMR, didn't really get a bounce there today. Rocket Lab, still deep in a pullback, trying to find support around here, like a lot of them are, as our quantum stocks. Still looking a little soft here, so I'm not calling a bottom in these sorts of stocks just yet, but I do like the fundamental setup out there for the market going into 2026, especially for crypto on the back of this massive technical divergence with the fundamentals we've seen. And so I think a big reason for the bounce we're seeing in Bitcoin and crypto today is actual buying in the market, not just a shift in sentiment. We've got the world's second largest asset manager, Vanguard, finally allowing their clients to buy crypto ETFs, which could be a really smart move, opening the floodgates for trillions of dollars of client assets to buy the dip, which is a major bullish signal for crypto because it removes one of the last big barriers keeping trillions of dollars of conservative, retirement-focused capital on the sideline. Vanguard has long been known as the most anti-crypto of the major asset managers. So this shift acts as a powerful green light for hesitant investors who trust Vanguard's reputation for prudence. It also dramatically expands the accessible pool of demand, especially from older, wealthier investors who control the majority of retirement assets. Even a tiny allocation from this crowd can have an outsized impact on Bitcoin's price due to its fixed supply. And this is a big change in their stance for many years, saying you will never see a Bitcoin fund from us. Even with the big launch and popularity of crypto ETFs last year, they said no thanks in a controversial move. But now Bitcoin pulled back 35% off highs. They decided to open the doors up, which produced record trading volume in Bitcoin ETFs today, over $5 billion traded. There was big buying right off the open because it's not just older clients, it's also institution, hedge funds, financial advisors that trade on Vanguard's platform, many of whom have actually been waiting and calling for this moment. They've got their opportunity to allocate to crypto now. And coincidentally, America's second largest bank, BOA, also today recommended crypto exposure in all client portfolios, telling their wealth management clients to allocate up to 4% of their portfolios to cryptocurrency assets, marketing digital assets available to its 70 million clients, marking the latest push by digital assets into mainstream financial institutions. Previously, only the bank's wealthiest clients could get any crypto exposure upon request to their portfolio managers. We also just heard some bullish moves from the SEC, saying the agency has enough authority to advance crypto regulation without waiting for Congress and plans to unveil an innovation exemption for digital asset projects within a month. And so Vanguard's the world's second largest asset manager. We just heard from the CEO of the world's largest asset manager, BlackRock, yesterday. That's Larry Fink, saying tokenization could redraw market plumbing. With BlackRock openly embracing tokenization, that's incredibly bullish, not only for crypto, but especially Ethereum, because Ethereum is the leading global settlement layer for real-world assets, smart contracts, and tokenized financial instruments. So with Larry saying the future of finance is tokenization, he's essentially pointing toward the very infrastructure Ethereum already provides. Tokenization requires programmability, decentralization, and security, all of which ETH has at scale. Saying tokenization will be the next generation for markets, even a liking today to the internet in 1996 when Amazon had just sold $16 million worth of books. And so even if a small percentage of BlackRock's 10 trillion plus in assets eventually moves onto blockchain rails, Ethereum becomes the backbone for that liquidity. And so I think Larry Fink's endorsement signals that traditional finance is preparing to migrate onto blockchain-based system. And Ethereum's kind of the rails that the future of finance and transactions will be largely built upon. And so I agree with this guy's analysis. Crypto isn't the sideshow anymore. It's the main event. We've seen monster changes over the last year, not just with the government and deregulation, but also Wall Street's adoption of it and now opening the doors for a lot more to come. And hence why I've changed my view and personal allocations to it over the last year as well, because the shift is real. It's no longer just a pump and dump pylon. It's going to be real utility. And in another coincidence, one of the largest Wall Street banks, Goldman Sachs, also for a long time was warning clients to avoid crypto, is now getting into the business in a big way themselves, acquiring a Bitcoin structured ETF issuer, Innovator Capital Management. Just as we've seen the world's second largest economy, who technically joined the World Trade Organization in the year 2000, opening the world up to them, for which they haven't returned the favor like they initially promised. China still clamping down on crypto because they can't control it. All these big fundamental development, whilst the price of crypto has been knocked down on some measures, as undervalued as it's ever been, relative to the dramatic rise in global liquidity set to continue next year as well, which it's normally correlated with. And so I'm not normally one to believe in market manipulation on a grand scale anyway, nor am I usually one to believe in collusion between big players. The market's just simply too big. They've got more to lose than gain, but maybe on a subconscious level, it's happened because, like I said, we've just seen quite a lot of coincidence. JP Morgan really talking down strategy, then backflipping. Vanguard, Bank of America, Goldman Sachs, BlackRock, all kind of opening the doors to crypto now after this big pullback that has flushed out a lot of retail traders, which I've got to say is definitely convenient for big money. Whether that was consciously orchestrated or not, it certainly has resulted in a great opportunity for smart money to come in and buy the dip. But no doubt plenty of investors are still on edge. This volatility is not for everybody. I'm not saying we've definitely seen the low. I just think it could be a good chance, a big technical thrust up off the lows after a big washout, elevated fear, dramatically improving fundamentals. It's all the ingredient for a tradable low, especially as some of the loudest bears have come out with fresh crash call, always attracting attention, kind of like an accident on a highway. A lot of people slow down to take a look. Certainly works well for others on this platform as well. But just like Robert Kiyosaki, how many billions of dollars have they cost their audience for their own benefit? And so it's interesting, we've had this big divergence between crypto and the stock market these last few months. A lot of people saying, is crypto going to catch up to stocks, or are stocks going to catch up to crypto? In which direction are we going to close this gap? Stocks may consolidate for a few weeks, month or so, while crypto catches up. And we could get some moves going into the weekend as we get a look at inflation data, PCE, personal consumption expenditures. Market's been pricing in good chance we're going to get a rate cut next Wednesday. This will be the last important data print we get before that could still sway the Fed's decision. Looking at trueflation data, which tracks over 10 million plus prices in real time throughout the economy, they've got PCE tracking at a relatively low 2.15%, which if true, definitely gives the green light for the Fed to go ahead and trim rates again next week. All of which is bullish for the stock market, and we could get seasonality play out, especially when we've already had good price and earnings momentum coming into this last month of the year. We can often see the market rally going into Christmas and the new year. As last December finished lower, but we haven't seen two consecutive lower Decembers since 2014, 2015. So that's not usually a pattern that we get, two down Decembers in a row. Of course, just one small technical point. Wouldn't go basing my whole portfolio on that. It's more interesting and entertaining than it is useful. But what's much more meaningful is what drives 2/3 of the economy, and that's consumer spending, which we're on track for a record shopping season. Looking at the latest data from Adobe, total season spend up 7.1%. That is a huge number. Far more impressive is the massive increase in AI-driven e-commerce traffic. You may have noticed it yourself. You can ask your favorite chatbot, Gemini, GPT, Grok, to do shopping for you. Describe a product you're looking for with specific detail, and it'll search the web and give you a list of links for which you can then click and go straight to the product page and check out. AI traffic up 758% year over year. That to me says the AI boom is not only alive, but accelerating at light speed. Just as the whole retail market actually breaks out, looking at the Redbook Index, which is a measure of US same-store sales year over year, comps, breaking out to 7.6%, and that leads retail sales, which is a lagging government data print. And so we saw a big fall off 2020 with the pandemic. There was all that pent-up demand, huge volatility in economic data, which then normalized. Now we've got retail sales breaking out to a 3-year high, which in my opinion is a bullish thing. And the president today just hinted that the next Fed chair will be Kevin Hassett, big-time dove, bull, easy monetary policy, looser financial conditions, along with being a big crypto believer. He's a former Coinbase advisor. We also got big news today that I think is bullish for the stock market, not only in the medium and long run, but also the short run. Improved sentiment and actual increased demand coming into the market, and that is Michael and Susan Dell donating $6.25 billion straight to the Treasury towards Trump accounts for children, with Dell's donation to cover children under 10 in zip codes with average incomes of $150,000 or less. That will begin on America's 250th birthday this coming July, and all that money has to be invested in US index fund, the S&P 500, which can't be touched until the age of 18. Some estimates showing by that time a newborn could have 191,000 at age 18, 2.2 million by the age of 60. I think is a great move, brings more people into the capitalist system, pushes back on socialism from people not feeling like they're a part of the capital system. And like I said, bullish for the stock market, supportive of premium valuations for many years to come. And kudos to Michael and Susan Dell for making this really big donation. I think it's probably the best thing they could have done, and giving back some of their incredible wealth and helping tens of millions of children get into investing, get into the stock market, giving them a leg up that they otherwise wouldn't have had. And part of that wealth coming from Michael Dell is thanks to the huge boom in AI, with Dell relisting his company back on the stock market right in time for the AI boom. Seen an incredible rally in his shares after being one of the hottest stocks in the 90s. Dell Computers pivoted to the cloud, now providing the infrastructure for AI to grow on top of, with AI being the fastest growing technology we've ever seen. The rate of adoption amongst US households still not even half of US households really using AI. Same with businesses, which again signals to me that we're still early days in a likely 30-year AI secular trend that's already having big changes in the workforce. After GPT was released in late 2022, which you could kind of liken to Netscape Navigator, the first web browser, being launched back in '94. There's been a big increase in the amount of companies referencing AI in relation to layoffs, obviously led by the tech sector, who are creating this AI boom, the early adopters. Still plenty of room for growth in non-tech sectors, but companies mentioning AI in layoffs have dramatically decreased the amount of job listings by over 10% just starting this year. And I expect that trend to accelerate the next couple of years, especially as robotics can do more and more thanks to smarter and smarter chips and more training data being made available. So it's just hard to see a future where Nvidia and pretty much the whole semiconductor industry don't sell a boatload more chips. It's going to be used everywhere. Even when they set up bases on the moon and Mars, they're going to need a lot of chips. I think Nvidia could keep surprising on the upside, and no doubt they'll eventually have a soft quarter or two. Same with the economy, but the long-term trend seems likely to go higher. And I think short-term, technically speaking, the stock appears to be finding support here. Looks like the dips are getting bought after a good earnings. Just like last earnings, we can see a bit of a pullback and softness and a delayed reaction to those good results. But now Nvidia and other companies are starting to take note of Alphabet Google's ride with their TPU chips. Now having the best chatbot Gemini, the best image generation with Nano Banana, coming out and announcing more partnerships today, really trying to pull in others in the industry, even their customers closer to them, lock in deals. And not just Nvidia, but also the maker of GPT, OpenAI, apparently declaring code red, feeling the heat from Google's sharp rise of late. CEO Sam Altman declared code red to enhance GPT's quality, delaying other products like advertising and AI agents. As just looking at the data, which is still a month old, could be even better. Once we get last month's data, we've seen a dramatic increase in the amount of Gemini app downloads, not all that far behind GPT now, with some signs showing Google's Gemini users are spending more time on that app than GPT. We've seen a big dramatic increase in Gemini's usability these past few months. And don't think for a minute that they're slowing down. Sundar Pichai saying Google will start building data centers in space powered by the sun starting in less than 2 years, aiming to reduce AI's environmental impact, planning to send machines to space next year. And so AI kind of plays into robotics and then space exploration as well. It's why America recently created the Space Force. And again, with big competition with China, also who have plans to go to the moon and claim large parts of it as being their own. And so this next move by Google is literally a moonshot, which they're known for taking. Some of them turning out to be really successful, like Waymo. Just moving on to what else is moving out there. American Eagle, famous clothing retailer, still making a great comeback. Once again, beating on earnings, still enjoying incredible momentum on the top of their Sydney Sweeney advertising campaign earlier this year. After the stock had been beaten down dramatically, they did the campaign back in early August. The stock jumped immediately. Their next earning came through with a monster beat. Stock consolidated, and then we just got their most recent earnings today, coming through with yet another beat. Even after increased expectations, just going down to the 5-minute chart, stock up over 10% in after hours to $23 a share, more than doubling since the Sydney Sweeney campaign. And like I told you guys back then, it was incredible value. My stock fair value indicator had it at over $20 a share. You'll often see this with retailers. They're highly cyclical and make for great turnaround stories. And even today, still trading a little under fair value here. Otherwise, just wrapping it up, taking a look at the market, S&P 500, 68.29, not too far off. All-time highs around 69.20. Not quite back to technically overbought levels just yet. VIX is still moving lower, 16.5. So has potential to get down to 14, even lower. The market continues to hold up. Fundamentals looking pretty good. Just had a great Q3 earnings season. Rates could very much be cut again next week. Market will be keen off PCE inflation this Friday. Bond yields still tame with the 2-year at 3.5. But of course, all the action was in crypto. Strong bounce off the lows on this big, powerful thrust up. Dramatically improving fundamentals, I think, increases the chances we did see a low on the 21st of November, with my technical indicators all pointing in that direction as well. But like I said, many of these high beta stocks still haven't put in strong signs that we've seen a low yet. But it's really crypto that's had a big divergence with tech stocks. So we'll see what the rest of the week brings us. And as always, I'll break it down for you each day after market close. That's all I got for you today. My name's Jared, and I'll see you back here again this time tomorrow. Cheers.